Hello traders, Gary Wagner with the Gold Forecast. 27th day of February, Sunday in Honolulu, Hawaii, about 3:30, which means that the market has opened in Australia. It is the first day of the trading week, and this is the daily report. Gold has been trading higher throughout today's session. I am highlighting today's session on an intraday line chart, and as you can see from the open, which is right in here, the market did open a little soft. It actually opened down about 80 cents, but has moved up respectively, is currently trading off of the highs about $3 higher. It did this morning come in and hit a high roughly at 14.15. Traders, we are looking at a box chart, and it is a daily chart. Each box represents one day. Very similar to the Henkin chart, difference being that there's simply a box drawn around the low and the high the entire range of the day. Reason for bringing that up this morning, what I wanted you to see, that low that we hit, this is that 1308. I wanted to really just focusing in on the lows, show you the ascent tack, or what I like to call the amplitude, in other words, the rate in which the market is moving up. It has been very, very strong ever since we started this rally in the end of January into the beginning of February. Traders, we are looking at a daily bar chart in which we have some channel lines and of course our Elliott wave count in there. Reason for me bringing this chart up this morning is in Kitco's commentary last week, I talked about the fact that we have had a series of 3 pennant or what I call flag formations. And what I had noticed was that in the first two, of course this had not actually broken out yet, but in the first two, when we reached the apex, it took us to new highs. And my theory was that as this market trades, it's been trading in what can be noted as periods of spurts and growths, followed by periods of consolidating price action, which is absolutely the definition of a pennant formation. My belief was that as we approached this particular pennant right here and we reached that apex, my belief was that we were going to go and test and break new highs. Of course, our record high is right here at 1431. Now, there is no doubt that ever since we did break that channel line, as you can see, the market has moved up. It has had a high today of around 1416. So we've just gone a couple dollars shy of testing the all-time record high. Well, what is my belief? Well, I will tell you that I do believe that this week we will probably see this market test and take out this record top at 1431, the top of that triple top that we got back last year. My sentiment is also that when we look at our channel lines, and this lower channel line here was resistance, but as you can see, it's a support line right in here. As we follow it through, my belief is that as long as we maintain above this particular channel line, the market really only has one place to go, and that is to go and test these upper channel lines. And that is one of the reasons that I believe so strongly right now that we are probably going to go and test new highs, and that could easily be this week. The last chart of the day that I do want to take a look at is our weekly Henkin chart, which of course is a Japanese average chart. Without a doubt, last week was a fairly strong week. The nice thing that I like is over the last 3 weeks we have had these absence of tails, and that's always a sign that I look for. We'll have to see what this market wants to do this week, but I will tell you this. We talked about the fact that I believed in terms of fundamental data out there, we had a scenario in which we absolutely are seeing what I'm calling the perfect storm, meaning we have a combination of factors that combined, I believe, will take this market to new record highs. This has been Gary Wagner wishing you, as always, good trading, and we'll talk to you tomorrow for another daily report. Bye bye.